The big thing happening right now in Bitcoin is digital credit. There is 3x more demand for Bitcoin in the market than the natural Bitcoin mining supply. That is a lot of buying pressure. Bitcoin is just a better technology to answer the multi-generational answer of how to store value. Probably 4 to 8 years from now, we'll be talking about the next Bitcoin bottom at 300K, at 800K, at $1 million.
Today, I'm joined by Alexandre Laizet, Board Director of Capital B, one of Europe's leading Bitcoin Treasury companies. What is the real worst-case scenario for Bitcoin? Can the price floor reach $800,000? And can digital credit become the biggest catalyst for Bitcoin's next all-time high? That's what we're going to discuss in this next conversation. For your average Bitcoiner, maybe they've just started investing, they're not too familiar with the whole Bitcoin treasury models and all the other aspects of Bitcoin that's going on right now. Why is digital credit markets so bullish for Bitcoin itself?
Because digital credit, the effect of it is that there is 3x more demand for Bitcoin in the market than the natural Bitcoin mining supply. That is how Treasury has been buying 200,000 Bitcoin more in a matter of months. That is a lot of buying pressure into the Bitcoin ecosystem.
How are you guys navigating the bear market right now?
Well, you know, 1 Bitcoin is equal to 1 Bitcoin. And the objective is to accumulate the most Bitcoin possible. And the bear market is a gift to the faithful. And we take the opportunity to build the most efficient machine for Bitcoin accumulation. And I would like to thank the bear for providing such a prolonged opportunity. And actually, we've never seen so much activity in Bitcoin capital markets in any bear market in the past.
What activity are you seeing right now that you weren't seeing before?
The big thing happening right now in Bitcoin is digital credit. Bitcoin-backed listed credit instruments that enable mainstream, that enable Wall Street, that enable every type of investor to get a form of exposure to the Bitcoin ecosystem through double-digit performance and lower than 5 to 10% volatility. And the total addressable market for digital credit is the whole credit markets, even real estate. Why would you invest in real estate if you can have a transparent double-digit performance backed by Bitcoin? Why would you invest in the S&P 500 if the S&P 500 is 10 to 15% performance with 10 to 15% volatility? If digital credit is 10 to 15% performance with lower than 5 to 10% volatility, then it's literally best than the other alternatives. So, of course, nothing replaces Bitcoin. Bitcoin is irreplaceable. But at the same time, 99% of the world needs low volatility, high performance. And that is what digital credit aims to address as well.
And can you tell us then as well, a lot of people that are new to Bitcoin want to know, when you see these big buys by Bitcoin treasuries like Strategy, sometimes the price doesn't move at all. Can you explain why that's the case?
So I would like to just take a step back and say that at the core of it, Bitcoin is just a better technology to answer the multi-generational answer of how to store value. It is the best technology, and by definition, everybody will adopt the best technology. Institutions and a lot of individual traditional investors, they want something very specific. They want high performance with low volatility. Bitcoin today, as it is, has high performance annualized over time, even the highest performance annualized over time, but high volatility. And that represents 3%, 10% of the global market demand, but 97% to 90% of the global demand wants low volatility, high performance. Okay. So digital credit provides the answer for 90 to 97% of the world capital and transform that into more buying pressure into the Bitcoin network. So Bitcoiners don't need to touch digital credit if they don't want to. But the actual effect of digital credit is more buying pressure into the Bitcoin network, which means more demand. At the same time, there is also a lot of offer in the market. And what happens every cycle in Bitcoin is that you get a new wave of adoption, which we've had last year in 2025, and we've gone from $15,000 a Bitcoin to $127,000 a Bitcoin.
Yeah.
And every time that this happens, close to 100% of the holders of Bitcoin are in profits.
Yeah.
And when that happens, you have about 50% of the holders that are likely to sell for profits. Every bull market this happens. And when that happens, then you get into a bear market. And when you get to the point where about 50% of the supply is in loss and 50% of the supply is in profit, what happens? You get a consolidation because sellers have left.
Yeah.
They can only sell once, and buyers remain, and you have a new floor that is created, and you have higher lows over time. We have started with $200 as a bottom, $3,000 as a bottom, $15,000 as a bottom, and now we have a bottom phase formation around $50,000 to $60,000 a Bitcoin. And probably 4 to 8 years from now, we'll be talking about the next Bitcoin bottom at 300K, at 800K, at $1 million. I'm looking forward to the next interview we have at BTC Prague 5 to 10 years from now, where we talk about the next Bitcoin bottom at $1 million a Bitcoin. That will be very exciting.
That's that situation. I mean, for Bitcoiners right now, though, do you think that we have hit a bottom? Have we, this $60,000 mark, is it the bottom for this cycle? Or are we going to see lower?
Historically, every time that we've been into this market configuration, Bitcoin has found the bottom within 3 to 6 months
From here.
from here. So it's not science. I'm just talking about past performance. Nobody has a crystal ball. If you have, let me know.
So are you guys now, as a Bitcoin treasury company, and you're the 25th largest public treasury company in the world, are you guys closely watching the price now to look for signals of the bottom and maybe go in with a big purchase? Or are you guys right now just constantly, consistently buying? What's your approach now within this bear market?
Capital markets provide more liquidity when the markets are trending higher.
Yeah.
When the markets are trading a bit lower, the capital is less available, but that hasn't stopped us from raising 15 million euros about 3 weeks from now, in the last 3 weeks. And with a capacity of extension for 99 million euros more.
Yeah.
And we are fully focused on digital credit, the opportunity for us.
So what is the goal then for Capital B? You know, you're the 25th largest public treasury company, as I said before. Do you want to get into the top 10? Is that a vision for you guys now?
Our vision is to acquire 1% of the total Bitcoin supply over the next 7 years. That's 210,000 Bitcoin by 2033. That is our core objective with the big market that Europe represents. That's the second largest credit market in the world. And France is the number 1 credit market within Europe. In fact, France represents as a capital market 40% of all Europe. We think that we have a great advantage there. And as Europe is privatizing all the pensions over time and redirecting investments into European-based issuers, companies, well, we think that this will provide also a big acceleration and great competitive advantage when it comes to consolidating our leadership position.
Amazing. Now, you guys have been around for a while, but in 2025, we definitely saw an uptick in the amount of Bitcoin treasury companies forming, and there was also a lot of FUD around it as well. Some people saying that it was a marketing ploy, you know, these new companies coming in and adding Bitcoin treasuries. From your perspective, what is the biggest risk now for companies adopting the Bitcoin treasury model now? Like in 2026, they haven't had this lead time that companies like Capital B have had. They're coming in late to the party. Do you see any major risks for companies adopting that model?
The risk for everybody holding Bitcoin is Bitcoin goes down by 80% every year and doesn't move for 10 years. That's the bearish case for Bitcoin in general.
Yeah.
Are you convinced about that case?
No.
Not your role to say, maybe, but the thing is, we would not be here today if we didn't think that Bitcoin is the next store of value for the digital era. In fact, it is already the standard store of value for the digital era. It is the winning one. And so you better be accompanying that wave or taking that wave, because you cannot control the wave. You just can adapt to it and work alongside it. And that's the choice of a Bitcoin treasury company, is to say, you cannot stop the adoption of internet. You cannot stop the adoption of Bitcoin, because Bitcoin is literally store of value for the internet.
So then looking ahead then to 2030, do you see most major corporations adopting Bitcoin on their balance sheets? Or are you still seeing that lag where there's hesitancy amongst the corporations still?
Ultimately, in the next 20 to 40 years, everybody will have a form of Bitcoin allocation through indices of S&P 500 or NASDAQ, or through their brokerage accounts in tax exemption wrappers, or through the pension funds that allocate a portion, or through nation states that decide to take a stance in it, or through digital credit products that can even be adopted by corporate treasurers, or through Bitcoin direct adoption by the corporations, as you mentioned. Everybody will get a form of exposure to Bitcoin. You could even argue that even if you have no exposure, you are kind of exposed to the risk of not having exposure. So if you ignore Bitcoin, Bitcoin will not ignore you, because it's like, can you ignore the internet? Can you ignore English language? This is the best protocol for savings in the world. And yes, you can ignore it, but you will miss out on a lot of opportunity. I took yesterday the example of a grandma that is 88 years old, has saved $1 million for during her whole life of working, and would like to have a bit of income. And today, that grandma only has access to government debt that is like 2 to 3 or 4%. And if you access that market powered by Bitcoin and you provide 2 or 3x that level, well, you are providing a different type of solution for a retiree that cannot withstand a 50% drawdown.
Exactly.
And so the Bitcoin treasury company is here to take those fluctuations of the Bitcoin price, because it's a very early stage asset in its adoption curve, and to provide for the more stable, more steady, more predictable types of return that 97% of the population typically expects.
Thank you so much, Alexandre. Appreciate your time.
My pleasure.
Cheers.